So this is an exciting topic, investment thesis. Let me go kick it off first. Does anyone here have an investment thesis? And don't be embarrassed if you don't, and because probably 99.9% of the population don't have one. So here's the cool thing, is after we're done tonight, you're going to have much of what you need, and we can give you the deck to go and create a personal investment thesis for yourself. And it's going to be something that that is going to serve as a well-reasoned argument for why you should invest in a particular investment or portfolio of investments. So it's going to serve as your decision-making process, your mindset.
Business plan for your investment.
Really, yes. That's a great way to look at it. So we'll kick it off here. So well-reasoned argument or rationale for making a particular investment. And so it's going to take into consideration various risk factors, environmental factors, your level of expertise, and just a whole culmination, and then put it together in a 1 to 2 page document that's going to serve as your guiding light for making investment decisions. And we are going to go, we'll start with, I think everyone pretty much knows, this is the sponsorship. We're self-sponsored for the space here. So we have an annual preferred return income fund, pays 10 or 11%, and it pays monthly. And then we have a Bitcoin mining opportunity, not the one you guys are in, but the next one that should be closing out in about 2 to 3 weeks.
Hold them to it.
All right. All right, so let's kick it off here. So why have an investment thesis? And this is why. It serves as a fundamental element for your decision-making process. And let me give you a little bit about my background here. So my wife and I, we never really did the corporate thing. And so we started out a little over 20 years ago, just launching connecting, meeting, dating, and then starting a business together, and getting married, of course. And so we really, the onus was on ourselves to build our own retirement plan, because we were immersed in Rich Dad's teaching. We were reading his book, playing the board game, going to seminars on real estate investing. And so we learned a lot, like doing for yourself and that whole concept. So we didn't have an investment thesis 20 years ago, but we had various other goals and budgets that were kind of laid out. So it's kind of, and I'm sure that, you guys have goals for yourself, expectations and things you have that you want to accomplish. And so I want you to think of the investment thesis as kind of like an additional roadmap to help you get to your investment financial goals in a very methodical way that keeps you on track. And the one thing that I learned recently that I didn't know back then is that there was so many distractions that came into our existence as we were running a business. We were fabricating museum exhibit displays of all things. We were buying real estate, and just to give you an example, we had someone approach us, and they had an IT venture startup company. And we looked at the pro forma, and we got super excited. It was emotional, it was exhilarating, and we invested money and we invested time. And what we got out of it was loss of sales in our company because of the distraction. So this is something that an investment thesis will help you keep on track with, so these things don't happen. Why have an investment thesis? So clarity of purpose is really the first point. So that's like if you think about having a vision statement for your business. So, where you want to see your business go, what, how being able to articulate the path forward for your company, for yourself, and being able to make decisions around financial goals, risk tolerance, and your investment horizon you have for yourself and your family. The second one is the rational decision making. So this is you can kind of think of this as like your mission statement. So this is going to be how you process immediate decisions that are coming into that you're facing on a daily basis, and so what your plan of attack is when and how you address situations as they arise. So your mission statement is very action oriented versus your vision, clarity of purpose is more about your mindset. And so this all will come into play in terms of how you put together your investment thesis. So risk management is going to be something. This is probably risk management, and the financial analysis portion of the investment thesis is probably what scares away the most amount of people, because most people just aren't financial analysts. You're like, oh, well, look at the risk factors. Well, many of you can research what those risk factors are, and you can understand, especially if you're a student of the industry that you're investing in, that the area that you're investing in, that you can understand what some of the pitfalls are. But when it comes to things like understanding, reading financial past performance data, reports, understanding where future projections are for that asset class or that particular opportunity, that's where a lot of folks are like, well, I'm not a CFO, I'm not, financially sophisticated that way, and so this is where what I'll say to this is that when the more you immerse yourself in the asset classes that you're choosing to go into, and the more you educate yourself on an ongoing basis, the more you're going to have conviction to see those rough areas or those areas of weakness that you may have in your life, to go and kind of overcome some of those shortcomings. I'll also say that it will also spur creativity, where you might find some investment partners or some people you can outsource to, vendors, friends that are in the finance community that can kind of help you offset some of your weaknesses, because nobody's strong in every category. And so, but the risk management is something that's very critical, because you want to assess, and Bob, I know you kind of shared with the group here, a story before. It's like, when you put together your investment thesis now, like if you ran that annuity opportunity, through your investment thesis meat grinder now, and you see like 10% prepayment penalty, it's only paying me, blah, blah, blah. And that's not in line with what my vision is for myself and my family, and where I see things going. And so that's kind of how I want to just bring up, apologize for using you as an example here. The other thing is, with risk management, it helps you identify the risks before they occur, and to put together a strategic plan to mitigate those risks before they even happen. But the only way you're going to really successfully be able to do that is to just be a student of the industry. I'll kind of give you an example. Like when we buy, one of the assets we invest in here are mortgages, and we have a division that invests in non-performing loans. So we buy in non-performing loans at discounts. We get them to perform at par. So what that means, I'll say it another way, is we may buy a $100,000 mortgage, pay $30,000. The homeowner hasn't paid in a few years. We work with them in a compassionate way, come up with a payment plan, and help them back on their feet, paying $100,000. And so that's part of one of our business pillars here. Now, with that said, so we're paying attention to consumer debt loads, record high credit card debt that's in this country at over 16 trillion. We're paying attention to the savings rate that is historically at 8.5%. Now it's at 3.7% after a spike during COVID. We're looking at people with just out of money. I mean, there's no other way to put it, and they're living off credit. And so that's going to trickle down to more delinquencies on mortgages, which is going to equate to more banks rolling up those into pools of defaulted paper and then selling them to companies like ours at a deep discount. So we kind of see that in advance. We're able to forecast that out. But we wouldn't be able to see that if we weren't a student of the industry. And kind of give you an example. Another example is Bitcoin, right? I think most of us here love Bitcoin, and just like learning about Bitcoin and the adoption, because it's really the popularity, really where the value of Bitcoin comes is not these traders that are kind of moving price around in the volatile sense, but it's about sovereign nations adopting it as a way to cure their monetary debasement. It's a way for Wall Street to offer that to people that want to preserve their wealth and grow their wealth for themselves and their families and pension funds, and then it's about retail adoption, people around the world that are just fed up with fiat currency and all of what that's about. And so the more there's awareness around that, so understanding the adoption curve and where we're at and where we're headed is a good way for us as investors into that asset class to understand. So improved communication. No person's an island. We're all here. There's people around us that are interested, vested in our success, and so this is where having an investment thesis is really sexy. That's all I'm gonna say. Like I can go mow the lawn, and my wife would be like, "Oh, that's good, you mow the lawn." But like investment thesis, honey, like you want to do this. It's not this is gonna work because it's I ran it through the system and everything checks out, and so it will help with decision making on the money side. It'll help with just bringing clarity around that, and that's always good from a relationship building. If I have a business partner, Sean, here, and so I have I mentioned spouse at home, Ruth at home, but Sean and I we have a whole game plan. Things are mapped out, well defined. In our roles and responsibilities, as well as how we invest. We streamline the due diligence process. All of this is mapped out in standard operating procedures. And so that helps for a healthy relationship. And so whoever you have in your world, the more you're able to map out things in systems and come to compromise, it's better. So to give you an example, this is we have our 4 C's for our company. And this is our investment philosophy, actually. So we looked at, and I mentioned this for those at Art Ovation. So we live by the 4 C's, and this is our litmus test for when we're looking at new opportunities. We want to understand that it can kind of pass these the criteria that's on the wall. And what's neat about it is everyone in the company. You can feel free to quiz anyone who works here. And if they don't know it, let me know. But everyone should know this. Everyone should know this. And that's the beauty of simplicity, as well as is just putting the visual aid and then emphasizing it with the team, because if our team doesn't know it, like how are we expecting anyone else to know it? How are we expecting to live it if just Sean and I know it? So the rest of the team. Strategic alignment is interesting because this deals with your long-term vision you have for your finances, and this is where it's super cool, because even if you're just new to starting investing, or you're kind of well down the road, you can see what the end game looks like. And the end game in certain cases, it can be beyond your life and how, your kids and grandkids and having all that kind of planned out. So you want to make sure that you map out how the small decisions are made, because those all gathered collectively will lead to your end result with your long-term game plan. And you want to make sure there's alignment with that. So if you have clarity around what the long-term vision, investment horizon is, and then you can really put structure around your decision-making process for the small decisions that you're making that lead up to how things will be in the end. That's really what that alignment piece is about. Now, adaptability is also kind of neat, because adaptability is the more well thought out your investment thesis is, the more you're able to account for changes in the market, changes internally, changes on a macro level, what have you, and how you're going to adapt to those changes in a very calculated and measured way. And so if you can account for that, or just understand that your investment thesis, the more just kind of well thought out you have it, and then how you have maybe your plan for making changes to it, because it's not static. You're going to be making changes along the way, and you want to very much account for those changes. Now, accountability is holding yourself accountable in the end to the decisions you make, to the results that you receive. And what's interesting is we're now a world, I believe, that's just very results oriented. It's all about, show me the numbers. None of it's about the hard work or the heavy lifting to get to that point, in the character building. Like, that's all like Little House on the Prairie, the Waltons. Like, you don't hear about that now. It's just like, where are you at now? What do you drive? What's the house you have? And just what's fascinating, like, because I was in El Salvador a few months ago, and I'm going back next month for the halving party, Bitcoin halving party. And these people are like the happiest people you ever meet. And they don't have a fraction of what we have here, but their happiness level is like off the charts. And so it's why I say that, I forget. But what I'll say is you're gonna have hold yourself accountable. How well you're doing against your goals and objectives. This is where you're going to express what your goals and objectives are in your investment thesis. And you want to be self-critical. How can I do better? What do I need to do more of? What do I need to do less of? Who do I need to bring into my world so that I can help them move closer to their goals while I'm moving closer to my goals? And also, who can serve as an accountability partner for yourself along the journey? And, you may have a business partner like myself. You may have a spouse at home. There's just maybe people like friends in your world where you guys are really looking out for each other. So these are kind of the things you want to clarify and document, who those accountability partners are. They're going to help you get there. So the investment thesis is you want it to be long enough where you're really articulating the purpose, who the audience is, the level of complexity is going to all be outlined in your thesis within 1 to 2 pages. So for yourself individually, it should be no more than 1 or 2 pages, because then it's not going to be something that you're gonna read, refer back to, really start living what it says. Now, for a company, a hedge fund, an investment company like ours, it's going to be about 5 to 20 pages. So just kind of keep that in mind. The goal is to be concise as possible while covering all the points that you need to cover in a thorough manner, and just don't be wordy, right? Like, that's all we're kind of saying with that. And I think the heart of it is as it relates to the 1 or 2 pages, is just think with simplicity in mind. So, give you an example. One of the goals that we have is this year is what, James? Keep it simple. And so we looked at every aspect of our sales and marketing team and all the processes, and we said, how can we simplify every single thing we're doing? Our messaging was too wordy. Our sales process was too long, too wordy. Like, everything was just too much, and then things get lost and you're not being effective. So we look for everything to be simplified on the sales and marketing side. And even I'll tell you, like, the 4 C's, I'll take credit for the 4 C's on here, but honestly, I'll tell you where it came from is we already had these points as criterias, but we went out to a Christmas luncheon with the team, and every year I'll get gift cards and I'll do pop quiz, and sometimes I'll do personal questions, and then they win gift cards, and it's just like a fun thing in addition to the lunch and all that. And nobody got our mission, nobody got our core values. It was crickets. It was so depressing. Like, they got okay, so and so went where for vacation last year, and they would be all over that. They know where that, but nobody knew what the heck our company was about. And I was like, that's got to change. I'm like, it's on us, right? You have to take responsibility, accountability. And so we made a change to that, and we really laid out what we're about. Our core values are back there. So that goes back to simplicity. So we want to invest in assets that we can understand. So if you drive a car, if you understand inflation, it takes a little bit more on the Bitcoin side to kind of get that for some, but for most. But if you own a home or you live in a house, you understand kind of what we're about, real estate and energy. So that's what we want to do, and that might speak to that, like that tech startup company. So if someone came to me and they're like, oh, I got this tech startup company. Look, you're going to make 1,000x in 6 months, and everything's going to be great, and you're going to be gone. You're going to go on a cruise. And I just would say that data to consider is I would go back to the weakness and strengths point. So I would look at this, and these are going to be components of your or considerations in your investment thesis. So I would look and out of the gate say, what am I not good at? Like, what here do I hate? What would I procrastinate with? And just get it out of the way up front, because otherwise you're just going to go midway through, you're going to half step, and then you're not going to do it, and then that's just nobody wins there. So what I would say is just find out what it is, and for most it's the financial analysis, but either way, what would you need the most help with? And then maybe if you already have an accountability partner or people in your world, it's not just a single person, but people in your world, you can start having those discussions. Be like, my heart is really set on building structure around my investment goals and where I want to go. But I'm really having trouble. I really feel like I'm going to have trouble with like an action plan and being held accountable, and I know you're so awesome in that role. Can you think you can help me, through this? And maybe they might want to build an investment thesis and then you help them in areas too. So it could really be a good win-win. So these are pretty self-explanatory market analysis. This really comes with that immersion aspect. So this doesn't work unless like the gym the gym membership doesn't work unless you go. And so you're going to get all the market analysis. You're going to have comfort level and understanding about the value proposition. You're going to have a good sense of what the pitfalls are. You're going to be able to at least have a sense of where things should be at from a financial perspective. All if you are a student and you're going to conferences and you're really learning, or you're listening to podcasts in those respected areas. And so it's going to take a commitment. The investment thesis is just there like a roadmap. So, I want to say this because this is very important. As you're doing risk assessment, this is really synonymous with vetting something. And so whenever you're vetting something, you need to have metrics in place. So when we vet a pool of performing mortgages, which we're always buying mortgages across the U.S., we're looking at equity coverage. So if a property is worth $200,000, we want to be in that deal for no more than $130,000. So it's called a 65% investment to value. That's the metric. We'll look at collectability percentages. We want to make sure that there's a good track record of on-time payments that are made. And so we're looking at, we've been trending 96.5% or 96.3% with our collectability percentage. So as we understand the industry and as we understand the risks of a homeowner not paying, and which means we're not able to pay our investors, which is not acceptable, we're building metrics that protect ourselves before we acquire the asset, before we put the money out. So risk assessment can really be forward thinking. It can really help protect you against what could be, and also with the action plan. Because some of you are just action-oriented, right? You want to just go figure it out later, but go forward, move forward as fast as you can. This is really going to be about, how you're going to acquire these assets. That's very often overlooked. People say, I like this asset. I like rental houses. I like, FANG stocks, and I want to go and acquire this many of these assets over this period of time, and I'll be happy. But unless outside Wall Street and something where you can click a button on Fidelity and acquire an equity, you have to have an acquisition process, one that allows you to source and vet deal flow in a consistent manner on an ongoing basis. So you're comparing apples to apples. And so this is where your action plan is going to account for acquisition. It's going to account for asset management. How are you going to systematically manage these assets? So in other words, if you have a few annuities, you may put and you didn't buy them all from the same bank. You may put them all in a spreadsheet and then measure performance over a period of time, something like that. But just have some way where you can manage your portfolio in just a very clear, simplistic manner. And this is something I think it's like an obvious thing, but I think it's overlooked a lot, and that is, what is your exit strategy with that asset? So you're gonna, you may have like, hey, I just got this property at a real good deal, Colleen hooked me up as a realtor. I locked in. I'm good. But then, and I want to go rent it out. Well, great. Like, what's have you done do you have all your market analysis in place? Do you know how long you want to rent it out? Are you looking to rent it out for 5 years till the next the next bull run with the real estate market, and you're going to sell at this top, and what is that top price, and have that price in mind. When the home hits this value, I know I'm going to sell and then move on with my life and what I'm going to do. So that is, make sure you have the exit strategy. So formatting your investment thesis, you're going to start, and we have these slides we can send to everyone if you just let James or Sean or myself know. And start with the objective and scope. So this is defining your goals, the scope of analysis, your time horizons, and what the expected outcome is. And we kind of already touched on market analysis. If you're talking about residential property, you want to talk about what the location is, what the demographics are, so you can understand rent expectations. You can understand the quality of the neighborhood. Schools are very important in terms for your rental income and some other market drivers. For financial analysis, we kind of touched on that. Improve communication. So this is where you're just. I would kind of tie this into just ongoing improvement in general, and that will require you to have a set time period, maybe once a month, go review your investment thesis against what your performance is to just make sure that you're on track. The point I want to make here is the strategic fit. So this is where you are the litmus test. So if you have new opportunities that are going to come to you because you have a strategy around acquisitions. So just by virtue of that, you're going to be at the right place, right time. New opportunities are going to come to you, and then you're going to see if it's a fit for your investment strategy, and it'll help you see what you're going to open the door to for consideration. But you also want to see from an investment strategy that exit strategy, how it looks going out the door. So as it relates to one of our C's, control, we actually, as part of control, we actually have a projection that we're very accurate with. Before we buy any mortgage loan, we're able to project the internal rate of return on that opportunity. So if it's a non-performing loan, we're able to say this is the chance that we're going to have to foreclose, which is only 1%, by the way. It used to be 10%, but this is the chance we're going to have to foreclose. And if we foreclose, this is our outcome. If we get a loan modification, which is like 80% of the time, this is the outcome. And then if they sell the property and we get paid in full, that's a good time for all time when you get payoffs. But these are the things where you want to kind of have that in your investment strategy. Now, impact considerations are speak to. It really just speaks to. This is our fourth C. This is our third C, is community. So we only invest in assets that lead to a better world. Like that's important. We also look at community in terms of the community with partnership with our investor partners. So we kind of look at it both ways. But you want to ask yourself, is this all about me? Like, am I just doing this just for me, myself, and I, or am I just trying to leave the world a better place than I came into it with? Am I trying to help a particular group of people? Am I trying to give back in a certain way? How and what I'm doing, or have something to pass down to family or to nonprofits that I'm a part of. And so this is where you can really lay out, and this is where I just get so excited. So when we buy non-performing loans, this is our non-performing loan 4C category. uncovering cash flow with committed, compassionate care. So our team is trained. Well, we only hire good people that are compassionate. You can't train compassion, right? But you can't train care either. But but we can teach them about the cash flow. If they're good people and they're willing to be kind and transparent and really work with people in a patient manner, and they work on our team here. We have some remote. We have some in the office. We look to create a loan modification plan with the homeowners that haven't paid in a few years that fits their budget, that they can afford. Because if they can't afford it, they're going to not what?
Not pay it.
Not going to pay it. So it actually makes business sense to be compassionate and look for a middle ground where we're still making a profit and we're doing right by the homeowner. That makes me feel good. That's in line with community. So whatever it is you're doing, like Bitcoin, that's a whole other, in terms of the good that it's doing for this world. I mean, that's a whole other thing. But whatever it is you're doing, like how is it benefiting something beyond yourself? I think is the point there. And alternative investments, which is this club, Sarasota Alternative Investment Club. It's really just a way to diversify away from Wall Street. and this building here represents Wall Street. Like every business in this building other than us is Wall Street born and bred. And so we joke in the office, we go, we're the church before you go see the casino upstairs. And then, because when you give them your money, you don't know where it's going and you don't know when you're getting it back. And for us, you can come in, you can talk to us, we're transparent, we send out statements. We can show you physical mortgages that we buy, we can show you what we do with the money, so there's transparency. So you just want to look at, that's like a value alignment with the operators or whatever asset you're purchasing is making sure you have that value alignment. It's very, very important with alternative investments. It gives you that privilege to be able to do that or that benefit. And then also too, alternative investments are a great way to diversify away from traditional market assets that and just be less correlated to those. So I know in 2009 when I started buying a lot of real estate in the DC area, the market crashed, right? The market crashed, even some residential housing, even though DC is kind of insulated. Yeah, because all the government money just flows strong. Government money flows strong. And so, but, we were buying industrial buildings and everything else because, plumbers and there's we had 2 churches as tenants. And so people still needed to conduct business. And so it wasn't correlated to Wall Street or it wasn't correlated to the whole mortgage crisis, the financial crisis that was occurring. So alternative investment, and so a lot of people are thinking now, what's interesting is, the popularity, the run-ups in gold and Bitcoin, and people are looking for safe havens for their money. As Larry Fink mentioned from BlackRock last month and on News Channel, said Bitcoin is a safe haven. People are running to safe havens like Bitcoin, and so whatever it is that you view as that store of value, alternative investments probably will be the place for it. So some of the popular ones are real estate investments, private equity, hedge funds, commodities, which I also have cryptocurrency here, but I'm going to put Bitcoin into the commodity category per the SEC, which is great. And then collectibles and art. I would love to get someone who can speak on art and collectibles at some point. That would be pretty cool. And private debt, if you're doing like private money lending and things like that. Last slide is, this was good. Sean gave me this quote this morning. out of Proverbs, and he read it, and I'm like, can you send it so I can put it on here? So I thought this was so well put. Money that comes easily disappears quickly, but money that is gathered little by little will grow. So I view the investment thesis is really about that. It's really about just slow, methodical, careful growth. So you keep what it is you earn, and then you're able to earn more and snowball it. And Rebecca gave a great presentation on the whole idea of snowballing cash flow. If you haven't seen that, it's on our website and on YouTube with Rebecca. I thought that was really good. Again, it's not a static document. It needs to be something that's living, ongoing, and I recommend everyone does one. So that's my presentation. Thank you. Any